It's 5 a.m. in the morning. I'm on the airport going to Varna to meet a few of my team members because yesterday we've lost one of our trading.com accounts. It was a 20k funded account trading the multipayer. And in one of his videos, Denzel Washington says it's not about how much you have, it's all about what you do with what you have. And this advice has been guiding me ever since I saw it. But when I lose an account, I always rephrase it for myself. It's not about how much you lost, but what you do after that loss. And the first thing we need to figure out with the team is how to manage these funded accounts. Because as you know, most EAs have inbuilt account protections in percentage or minimum account balance. So if we have a 10k account and the EA goes in the drawdown, we can set it to, let's say, 9,100 to stop just before we lose the account. But that's kind of useless because we will have just $100 left, no room for trading, and it's nearly impossible to recover such an account from that point. And especially with the prop firms, it's even worse because they have 3% daily drawdown. So what, you set it to 2.9% and you will just leave 0.1% for a recovery for the rest of the day? Or if you set it to 5.9 overall loss, still 0.1% is not enough. So we need to figure out such a strategy so that we will leave some decent room for recovery, or in other words, to give the account a second chance.
Okay, so if we look at the multipair that failed on the second stage, it made a little bit of a profit and then it dropped because of the Swiss yen.
Yen is very volatile.
Yes, and I saw actually the Swiss yen on a few with the robot, so I think FX Stabilizer also had a drawdown with the Swiss yen at the same time. But let's have a look just at the Swiss yen. What was the drawdown? I will filter just the Swiss yen. I think it was just a little bit. I will go to floating profit loss, and yes, you can see it's just below the 10%.
But check
enough.
It was close.
Yeah, that's where it closed the account, so we cannot see how much exactly it went down, but we can see this on the live account. This is the $1,000 live account where we had one time withdrawal, second time withdrawal. They are all trading with 0.01 in here, I believe.
Yes.
0.1. Yes, everything was 0.01, so we can see that it wasn't a big drawdown. And here in the live account we can filter the Swiss yen, and here we can see that the drawdown was also just a little bit below the 10%. So I think we should go even lower risk with the new account we start. Even a little bit lower than what the backtest showed. Obviously the $1,000 account we can go below 0.01, but on the funded, instead of 0.20 we can go to 0.15, maybe 0.1 even on a 10k account. No, it was a 0.1 on the 10k account, so it should be even lower, 0.8, 0.7. I will have to see the whole backtest to make sure that the drawdown with Swiss yen doesn't go below 10% again, or we can simply remove this pair and just trade the rest. Because if we also look at the total net profit, the most we've got is from a euro dollar and the pound dollar, and then is the Swiss yen followed by the euro cat and euro yen. So maybe we can do a combo of 2-3 currency pairs for the new account, or like with the live accounts, we can also put them in separate funded accounts. Yeah, so each currency on a separate account. Actually, this is what exactly we discussed with Sam in the morning, that also for the funded accounts, whenever there is a grid, it's better to put on a
standalone,
every currency to be on a standalone account. So if one blows, if one has a big drawdown, we'll just lose one of the accounts, not all of the accounts, or not a bigger account at least.
Recording? Yeah, okay, it's recording. It's 5 in the morning, guys, and
It's really hard to wake up so early sometimes, but we're having the first meeting for the day with Sam and Ilan from the team, and we'll have a look at the dark EAs because we want to put some more of those on funded accounts. And we need to be careful because there is drawdown of 10%, as you know, and we need to put it within the rules. We will see in a second why, because we lost one more account yesterday, and I want to make sure that this doesn't happen. And waking up in the morning sometimes is really hard, but if I wake up at 5:36 and I work actively until lunchtime, sometimes I stop at 2 p.m., then I have the rest of the day to spend with my family, with my kids, to go to work out, and that usually is so productive for me. But you have to go to bed early. That's very important. Hi guys, good morning. How are you doing? I'm good. Sam, you need to move to Europe, man. Just it's so hard to wake up early sometimes. Right, so one thing to show you before we move with the dark EAs. Maureen was here yesterday, and while he was here, one of his $200 accounts failed. Live account, like it got the margin call, but he was trading there some of the happy EAs, and it was a combo between 2-3 happy EAs, all trading 0.01 of course, but one of them I think was trading more than one currency pair, so it was too much. And I really think we need to stick to these procedures, right? Where we have no more than 5 accounts for one EA, no more than 50% max drawdown.
Sorry, no more than 5 accounts, did you say, or no more than 5 EAs on one account?
5 real accounts for one EA, because sometimes we see one EA is doing really good and then we want to put it on more accounts, but if it fails on many accounts, that's bad, right? So we need to make sure we don't put it maybe 2-3 real accounts, 1-2 funded accounts, a prop firm probably, and that's maximum. And then what's important is the account size. So if it's an EA that can backtest on $200 account, then we should put just 1 pair and not 2-3. Just like what I did with the multi-pair, for example, if I show you the results, you'll see that we have it on a bigger account, but then we've put multi-pair, EuroCAD, Eurodollar, and Pound Dollar on $200 accounts, but it's just those currency pairs, right? And then if it is gold, obviously it needs to trade fixed 0.01 lot, no grid on 200. If there is a grid, minimum is 500 in my opinion, and it could be one currency with a few recovery orders, such as the Wall Street recovery prop. Market Master also has 2-3 recovery trades, and Andreas, the vendor, while we were having the podcast here, he said that the bare minimum for it is $500. So pretty much he confirmed what I've put in here prior to having the podcast. And then on a $1,000 live account, we can comfortably put one currency if there is a grid martingale, but just one currency. If more than one pair, we either separate into different 1K accounts, or if we want to have it together, like what we have with the FX stabilizer right now, it should be 5K account. Yeah, so right in here, the FX stabilizer is trading on a 5K account with 8 currency pairs. I think that's still too much. Probably 7-8K will be the account balance where I'll feel more comfortable with it, but I'll keep it this way. So far, we've already got good withdrawals. Also, Waka Waka, here's a good example. On 3K accounts, we have it trading with 3 currency pairs, right? So there is like 1,000 for each.
On the track record, was that a withdrawal?
Yeah, that's a withdrawal right in here, and still made some good, like 10% after the withdrawal. Just for you, Sam, have in mind those when you're backtesting all of the EAs, right?
My backtesting results generally tend to align with this. Having a grid on less than $1,000, a grid martingale on less than $1,000 is almost never going to work.
Absolutely. Yeah. And it doesn't mean that every grid will work on $1,000. Like some might still blow on the backtest, some might still
some
be
need
very
more, but
aggressive.
that is a minimum.
Okay, go ahead and share your screen if you want to show us the dark EAs, what you got from the backtesting.
So basically what I did, so I took all your set files, got all your dark EAs here, and I've separated them. So I started off by backtesting on 10K for 10%, because it's just, like the bigger size means more work.
10%?
10% risk. So we're not doing live accounts for 10K. So 10K is 10% risk. It's aimed at prop firms or iFunds, essentially.
So with a 10% drawdown as a max, when you say 10%?
10%, yeah, drawdown as a max for a 10K account. And so I think you gave me about 80 files and whatnot, and I have backtested them for a couple of years. I guess some of them are older files and they had too big drawdowns of some of them, but the ones that are good, backtested them all with 0.01. So it's like 10K 0.01. If it was no good, I didn't take it forward from that point, of course. But if it was good, like for example, this one here was good. It had that's about 3 times the profit than the drawdown. And so I just need to increase the risk, as you can see here. So if there's a second run there, so if I go to the dark algo, for example, I've saved that one because it's obviously increased the risk. So if I go to the dark algo.
What time period are you backtesting on, Sam?
2 years. Yes, I've increased the risk to 0.07.
And some of you might say, okay, why do you care about $200 account that failed when you're trading nearly 100K live accounts? Well, I care because it was exposed a little bit with more currency pairs. It wasn't with the procedures I've created. Pretty much it was a breach of the rules that I've created for me and my team. And if we keep the tempo, if we scale the same way we scale this year, next year we might be trading over $1 million in live trading. And then if somebody from the team exposes the accounts too much, then it's gonna be a huge loss. So every account matters and the rules are the most important if you want to stay longer in the game.
Okay, it's 1 a.m. in the morning. I just finished recording videos and I decided to share with you how I started with all of that. 10 years ago, I lost a lot of money. I had this silver position and I lost everything. 1st of December 2015, I'll never forget the date. It's funny, I'm recording this video exactly 10 years later. I was playing volleyball and when I came back, I checked the silver price. It had dipped below $14 for the first time in 5 years or something like that. So I basically risked my entire account with a stop loss, convinced it wouldn't go below $14. It hadn't been there in 5 years. There was no chance, right? And then, boom. One single spike, one of those spikes for one day. Check the chart, it completely wiped me out. And what's funny is that silver has never been there again in the last 10 years. Crazy, right? That was the moment I realized I knew nothing about the markets. So what I did is I took a loan from my best friends and I went to London to study trading. Now looking back 10 years after that silver crash on the 1st of December, I see something different. It wasn't just that I didn't understand the markets, I wasn't ready to accept risk. At the beginning, people always think trading is risk-free. I was sure it couldn't go below $14. Imagine if my stop loss had been at $13.50. I would probably still be holding that silver position today. And honestly, I don't have anything of what I have now. Because that event taught me the most important lesson. It's not risk-free, and it shouldn't be. Nothing in life is worthwhile unless you take risks. Nothing. If you don't risk, you don't win. So don't complain about losses. Learn from them. Don't repeat them. I never repeated that mistake. And I'm actually grateful it happened to me. It brought me back to the ground. I lost everything. Started learning, worked hard, and built what I have today. And what I have now is simple. a clear and reasonable trading approach that allows me to win every single month, slowly and steadily. A well-diversified portfolio of EAs and a dream team of traders who help me a lot. That's more than enough for me. How much we trade or what the account size is doesn't really matter. Whether it's a $200 live account or a 5K live account, I look at it the same way. It's all about making the right decision for the risk based on the results we already have. Now, when we trade with EAs, there is still risk. But we also have things we can rely on. The broker, like today's sponsor, IC Markets, stable conditions, smooth withdrawals, and the confidence to deposit larger amounts. That's something I didn't have 10 years ago. Backtests, something I didn't even know existed 10 years ago. Track records, and this one is huge. And by the way, when we lost the 20K funded account, while I was recording this video, I immediately made a detailed breakdown with the team. We analyzed everything that went wrong and found the right risk for the new account we started. And I showed everything in a video that is probably already published. I'll leave a link in the description. I think it was called My Multi-Pair EA Strategy that finally got everything right. So yeah, we can minimize risk as much as possible. And it's been a long time since we lost a big live account at Algo Trading Space. That doesn't mean we will never lose one again. We will, I'm sure of it, but I'm ready for it. And when it happens, I will learn even more. I will see what I missed and I'll become better at what I do. To sum it up, as Angus, the head of trading at IC Markets, said during the podcast,
the winners were all using the system on a low risk, and ones who had blown up, they were all using high risk.
A bigger account with low risk. That's the only way to stay in the game long term. And not just stay, but actually make real profit. That's the key.